Well, crude oil has been on a 7-week hot streak. We're pulling back a little bit here, but we had been sitting atop 9-month highs. Can the momentum continue? Let's bring in Philip Strebel, as Chief Market Strategist at Blue Line Futures. Philip, what do you think? Can it continue?
I think it looks really good. I mean, oil's gone $25 from the July lows on up to where we're hovering just a little bit above $80. I think that we've got a new price band that's in play. I think it's like the $75 to $85 level. I think the extended cuts out of OPEC, the declining U.S. inventories, the resiliency of the U.S. economy have all just really, provided the tailwinds on that market.
What about China? Why hasn't that had a more material downside effect?
Yeah, it's been hitting the other markets. Like we've seen some of the agricultural products come off, some of the precious metals like silver, copper, platinum. Those have been where it's mostly those industrial metals that have been hit. We do believe that China will come out and provide some kind of stimulus into the market, and that could provide that second, tailwind behind the market.
You're right. There is a meeting by the Chinese central bank this week. Ahead of that, we're going to get this big data dump out of China, everything from retail sales to fixed asset investment tonight. Against that backdrop, copper is trading at around a 1-month low. What do you think the upside could be for copper?
I think we could retest $4. I mean, it seems kind of far away right now. We're trading like in the low 370s. We did have we've had just that series of that weak economic data, in any kind of rally we've got has been beat back down. But that's kind of where everything starts. It always starts with a short covering rally. It starts with some initiative, some stimulus measures, and a plan, especially by a company or a country like China. They consume half the world's copper that's out there. And I think that that would be the catalyst that gets the party started. Then you'll start to see silver prices lift with it, and then also the platinum prices.
A lot of people who are bullish on electric vehicles like to talk about copper as kind of pulling away from, the Dr. Copper of what's going on in China, and that it's got another structural story that's part of it. How do you think about that?
Yeah, 100%. Like EV vehicle sales, also going back through the grid, improving the electrification. I mean, I think these are a lot of different things. There's just too much demand for electricity right now and alternative energy sources that they've got to come in, and they've got to utilize quite a bit of this copper that's out there and other rare earth elements.
One that is often talked about less, but perhaps has that dynamic as well, as silver. And silver has pulled back recently. How are you thinking about silver?
Yeah, silver's had some big problems. Like you rewind 2 weeks ago, it fell 3%. Last week, it fell 4%. It's really been breaking down quite a bit. I'm really surprised that we're hovering in these, the $22 to $23 range. Historically, that's been longer term support. The 200-day moving average did not provide much of a support to it whatsoever. And it's really just weighed in by, it's a lack of demand right now. Maybe not so much on the physical side. I know that always like coins and small amounts of bullion, those are always on the move for collectors, but it's the industrial demand that's got to really pick up. That makes up 54% of silver's demand.
Gold is looking at its 200-day moving average, threatening to break below it. It's trading at the lowest level since March. How do you think about what gives gold momentum?
Yeah, back to the upside, that's another one that you got to look forward looking, where we need to see, you can't see surprise upside on GDP. Like they're expecting 1.8, we come out at 2.4. Well, that's not going to give any kind of firepower for anyone who's saying that the Fed's going to cut rates anytime soon. I know that Goldman Sachs came out with their estimates that we'll see the first rate cut in the second quarter of 2024. I think that's when you start to really see Treasury yields break down. You start to see the dollar index come off, and then really then your play for the gold market is there, and we could really threaten that 2000 again.